No credit, bad credit, no problem. No, thank you. Okay, welcome back to my channel, World War Problems. I'm sure we've all heard of those ads. You know the ones I'm talking about. The ones that will give anyone a loan that has a pulse. You know what I mean? I know what you're asking yourself. Is this for real? You know what I mean? The short answer is yes. The longer answer is it's complicated and usually comes with a catch. In this video, we'll give you some inside info on how this is accomplished and at what cost. But first, do me a quick favor. Help support my channel by smashing that notification bell and subscribing down below. I'd really appreciate it. Okay, let's dive right in. So let's say you need a car and you're in need of a loan, you know what I mean? And you know your credit's bad, and these ads, for easy loans at these used car lots are looking pretty appetizing, So what do you do? Well, what are your options here? You go about getting a loan, and here's what they say. One option is you can get someone with better credit to co-sign the loan, which puts all the financial responsibility on the co-signer. Next option is you get your own financing on your own, but you pay a super high interest rate, and it could be as high as like 30%, like loan shark stuff. Or the last option is get dealer in-house financing. The first option, you're looking, the co-signer thing. You're looking at, bugging your family and friends to sign their life away on a loan that not even you is 100% sure that you can pay it back. You know what I mean? Most likely, if you have bad credit, there's usually reasons for that. You know what I mean? Like you didn't pay your bills in the past. You might, maybe you go through jobs pretty quickly. And so stuff happens. You know what I mean? So it's life. It happens to everybody, and you never know. You might end up screwing your family member or friend or something like that. So, ultimately, you may be putting, harming your family member or friend, and permanently ruining your relationship with them. This could be a good option in certain circumstances, like if you're a teenager and you're buying your first car, you have a job, you get decent grades and have no debt, but you just, your credit just stinks, you know what I mean? And they just don't want to give you financing, I think someone like having your parents co-sign for you would be a pretty good deal, and I think it'd be, with very little risk, but if you're that guy with bad credit, due to non-payments, can't hold down the job, maybe you got some sort of addiction, you know what I mean? Like either alcohol or drugs or, gambling, who knows, and let's say you're the type of person that would will say or do anything as long as that benefits you. You might want to reconsider asking for a loan, from anybody you're close to, because the chances of defaulting are pretty high. You just don't want money become a wedge between family members. You just don't want it. I would recommend against it. Second option is if somehow you qualify for financing. Let's say your credit is bad, but it's good enough to get some sort of financing from some weird bank, credit union, whatever. Most likely it's going to be, like pretty high interest, 20, 30%, maybe more. So let's say you get a car for $10,000 at a 5-year loan. By the end of that loan, you're basically paying triple. You know what I mean? So you're looking at down the road, you're looking at $30,000 for that car. So you got to ask yourself, is that car worth $30,000? I don't know. But is it worth it? Depends. What I mean? If you're just coming out of bankruptcy and you're trying to rebuild your credit, this is actually one of the fastest ways to do it, to build that credit, to get co-signers and stuff like that. That really doesn't build your credit. What builds your credit is getting your own financing, making consistent payments over long periods of time, and showing that you started out with a high balance, let's say 10,000, and in 5 years, you pay that thing off down to, either paid it off totally, or let's say you got it down to $1,000, and you never missed a payment. That will look great on your credit report, and you'll see your credit, really increase. So there's that option, but also an expensive one. So what I would recommend, if you did go with this option, I would recommend seeing if you can afford to lower the amount of years from, like, let's say 5-year loan down to a 2 or 3 year loan. That way, that alone will save you $10,000, maybe even $15,000 in interest alone, while you're still building a credit. You know what I mean? It only takes a few years to establish credit, and it actually, it can be pretty quick. You know what I mean? So so there's an option there. So maybe, and if you can't afford that $10,000 car, maybe get a $5,000 car, and that way you can get that 2 or 3 year loan, and that way you're not spending outrageous $30,000, double or triple the amount for the car. You know what I mean? Last, there's in-house financing. In-house financing can be a great option if you need some wheels and to get to work, and traditional financing is not an option. Like, let's say you have zero credit, or maybe you just filed bankruptcy, and maybe your credit is just in the toilet. You know what I mean? Like, no bank anywhere will give you a loan. Or maybe, it might actually be a better deal to get in-house financing, because sometimes these guys, the way in-house financing works is usually, it's basically exactly what it says. You're getting a loan from the dealership itself, from the owner, who owns the business or whatever. He's fronting the money out. He already paid for the car at an auction or whatever. So what you're doing is just, he's just basically just loaning you the car. He keeps the title, and he's loaning you the car with, some sort of down payment. And in return, you're promising to pay a certain amount of payments, and and he's hoping to get all of his money and then some. You know what I mean? So the basically in-house financing, you just want to be very careful. Okay, and I'll tell you why. Okay, so I've had a couple of family members that had some situations, and it didn't turn out well. So let me tell you about them a little bit. Okay, So, um, one situation I had was I had a family member that bought a car for, it was a pretty cheap car. It was like $3,000. You know what I mean? And he put, he got his tax refund or whatever, and he put $1,000 down. And, he was able to drive off the lot that day and was able to, and he made, he was going to make payments for like, let's say 6 months to a year. Usually they're pretty short term arrangements. You know what I mean? So let's say he's going to make these payments. Well, what happens is, what if you miss a payment? They will actually now if you're cool with them and you communicate, say, hey man, I'm a little short this month. Can you wait till next payday? They might work with you, if you communicate. But let's say you don't communicate. What happens? They will literally come to your house and repo you the car. And what happens is they repo it. They might even still have, I don't know, don't quote me on this, but I wouldn't be surprised if they even have an extra set of keys for that car, since it's really their car. And they might come and just come to your house and just take your car. They don't even have to hire a repo company. You know what I mean? Or they have, their buddy, somebody just hired last week to say, hey, go to this guy's house and here's the keys. Go grab this car real quick. So once they get that car back, what happens? Do you lose the car? What happens? Usually you can get the car back, but at a steep cost. So you're looking at paying maybe a $500 repo fee plus fees. You might even get, and then plus you have to catch up on your payments. You know what I mean? And make some sort of payment arrangements with them. Now after you jump through all those hoops and everything, this guy got his car back, and literally the very next month he couldn't make his payment because he overextended himself on just getting his car back. You know what I mean? So then it got repoed again. So in the end, he ended up losing the car. And he was probably out close to probably $3,000. And then once he was out the $3,000, he had nothing to show for it. The car is back at the dealership being sold for another $3,000 to some other guy. And the process goes round and round and round. And so, yeah, so there's one situation. Another situation was I had someone else buy a car. They paid about $4,000 for this car. They put a pretty substantial down payment. They put about $2,000 down. Now, just think about this. Usually, whatever down payment you put down, that car is basically paid for. You know what I mean? According to the dealership. You know what I mean? He probably paid less than $2,000 for this car at the auction. So when you put $2,000 down or $1,000 down, he probably paid that or less than that. So he basically, at worst, he's broke even. And then any payments you make beyond that is just pure profit. And so really he's got nothing to lose, and, but, if it works out and everybody makes payments, it could work out for both parties. So don't get me wrong. I'm not totally against it. But I'm just telling you, going back to my other family member, they paid, so original price, $4,000, down payment, $2,000. They paid on this thing for almost a year. It was like 100 and some a month, I don't know, for a year, and it was going to be paid off. They literally had like 3 months left to pay on this thing. it was almost paid off. She gets in a car accident. The car is totaled and was her fault, and she only had liability coverage and stuff like that. Or no, I actually take that back. She did have comprehensive, and so the insurance company actually wrote her a check for the car being totaled. So the insurance company wrote a check for $4,500. So $500 more than the car was originally worth. But they didn't write it to her. They wrote it to the owner of the vehicle, which was the dealer. So the dealer ended up just, he didn't know what was going on. He just saw a check in the mail for $4,500 for this car. And he's like, he went to the bank and cashed it and didn't even say anything. And then when she confronted him about it, he's like, well, that's just the cost of doing business. You know what I mean? That's my money. That's my car. You're on your own. It's not my fault you wrecked the car. So she was out. She was she was out like almost $4,000 because the car was almost paid off. And now she's left with this car that's basically broken and can't run, does no good to her because it's totaled. So all I gotta say is just be careful. So now looking back, each option has their benefits. Don't get me wrong. And, and if you're, if you're looking, at each option, it all depends on your situation. Cosigner might be a great option. I know, my mom co-signed for my first car, and I've actually co-signed for other family members, and no problems, but could it have gone wrong? Yeah, it could have gone way wrong, getting financing high interest rate could be your only option. If they don't offer in-house financing, that could be your only option if you want a car. And then in-house financing, it can be decent, but usually they don't, mark down the price of the car or anything. You usually have to pay full price, and but you're probably paying pretty little interest, because it's just a short-term loan. It's just a deal. It's just a handshake deal usually, or I think half these dealers don't even write anything down paperwork, so it's kind of shady. But no disrespect to the dealers out there. So I know you guys work hard, and I'm about hustling and making that cheddar. So do what you gotta do, and and I know you help out guys out there. So we're respect out there for the working man, and so which option is best? I guess going back, it all depends on your situation. So who knows? It could be none of the above. You could just say no, thank you. Maybe I don't need that car. Do you really need that car? Could I wait like an extra couple weeks? Maybe work some OT at work, and then I could pay off that car in cash, and then even get a better deal. Or maybe I can find a car on Craigslist or Facebook and wheel and deal, and find a car for $500 maybe. Who knows? I did it, so you never know. So that's the end of our video. Like I said, I'm not an accountant, financial advisor. I'm just a guy on YouTube discussing real world problems and solutions. So definitely protect yourself and do your own due diligence. So if you like this video and would like to learn more about maybe coming up with money for that down payment for that new car, click on that link above and watch my other video. It's called Need Cash? Here's How. Thanks for watching, and make sure to like, comment, and smash that notification bell and subscribe. That way you don't miss any new content on how to tackle real world problems. Have a great day, and peace out.